Can we also do bullish debit spread, leveraging bullish credit spread instead of a roll up? You can do that, but then you need to be very sure that you're going to see a directional movement. I understand that it would be exciting, but usually when a successful breakout occurs, the momentum is fastest when it is just breaking out. And when it is just breaking out, you really are not sure whether it is a successful breakout or not. So it's a zone of confusion, and it is a zone which has eluded traders for a long time. It has created a lot of confusion. Then you have false breakouts, fake outs, and all those kinds of stuff that can create a lot of problems in your trading. I like to be away from such critical decision zones in the market. It is a possibility. It is called as the Catapult Trade that I have covered in my options course. I call it the Catapult Trade. Alright, so I'll just explain what it means. Catapult Trade is what I call it. What it means is that you leverage your profits. So absolutely correctly you have said that if I have a bullish credit spread and I am making money on it, and then there is this resistance and I see some absorption of supply and I suspect a big breakout, I can establish a bullish debit spread. All right, so bull call spread basically can be established here, and here we are using bull put spread. Okay, so this can be established, and usually whenever you're establishing a bull call spread, what will the payoff diagram look like is this. So you have very little loss and there is a big potential of profit if you select your strikes correctly. So what you can do is whatever profits you have accumulated in this trade, you use them to cover the losses for this bull call spread, and then you play for this profit. So if this breakout happens, you make multiples of what you were originally making. So if you're making, let's say in our case we are making 2,000 here, we will make much more here, 6, 7, 8,000, 4, 5 times what you were trying to make. If we want to keep this loss same as this profit, because if you start risking more here, then you can make even more here, but that is not the point. The point is to not give away money. So if you make 2,000 profit, you keep your max loss in a bullish debit spread or bull call spread as 2k, same as this, and then you try to exploit this. So this can be 6, 7,000 around that, and you can make multiples of your original profit. And if it works out, then you'll make this also and you'll make this also. So this is already there, but you'll also make some additional profit. So it is called as a catapult trade, where we leverage existing profits to take on some trades where a directional movement is necessary, and if it happens, then it gives us increased profits. So I have covered this strategy, but since my last intensive in May 2021, I have found only one legitimate opportunity to leverage this. It's not easy, it's not very common, but it does happen, and whenever it happens and if you can exploit it, you will make a good amount of money. The idea is correct, but the execution may not be as easy and as straightforward as it looks. And to add to the answer, rolling up and establishing a debit spread are not one and the same thing. Rolling up may only mean that markets may not come down. That's the only reason why you're rolling up. But when you establish a debit spread, you are saying that markets will move up, and that too sharply, quickly, in a limited period of time by sufficient distance. So these two are very different statements. One bets on directional bias and one bets on directional movement. You know that I don't like to bet on directional movement, and I am a big fan of directional bias. So obviously the reward to risk is also different there. You get rewarded higher because you're taking more risk. I can accept lower rewards by rolling up. Rolling up will not give you much enhancement in profits, but it will give you some increased profits, but the risk will also be limited.